Swing Edge Pro, the intelligence feed for decisive traders.
All right, let's get straight to it. Our target for this briefing is VTEX. We're going to dive deep into the data to see if we can uncover a strategic edge for a potential trade. So here's the million-dollar question, right? Is VTEX setting up for a major move higher, or is this a value trap just waiting to snap on us? That's the core of what we need to figure out. Okay, kicking things off with phase one, the initial scan. First, we need to get our bearings and establish exactly where this asset stands in the market right now. And listen, this is absolutely critical. VTEX is trading at $3.16. That's just a hair, 1.28% above its 52-week low. What does that mean? It means we are right on top of a major support level. This is a historical line in the sand where buyers have shown up before. This alone makes the risk-to-reward conversation very, very interesting. So let's move on to phase two and build on that. We're digging into the bull case now, looking for the positive indicators that could give us that strategic edge. Now, when we run VTEX through our 9-point criteria assessment, something pretty interesting pops out. It actually meets a solid 5 out of our 9 key indicators for a value play. Look, it's not a perfect score, but it definitely tells us there are some serious underlying strengths here we need to pay attention to. So let's drill down into those strengths, shall we? Because the criteria that VTEX did meet, well, that's the real foundation for any potential bull case here. First up, and this is a big one, institutional ownership. We're talking 42.45%. When you see the big money holding a stake this large, it can act like a powerful anchor for the price. These large funds are typically long-term holders, and they're a lot less likely to sell into weakness. And this chart right here just paints the whole picture perfectly. You take that institutional ownership and you add in the 41.32% held by insiders, the people who actually run the company, and you get over 83% of the stock in the hands of what we call strong hands. That's a massive vote of confidence right there. And it's not just about who owns the stock. The company's balance sheet looks rock solid. A cash-to-debt ratio of 98.33%. That means they have exceptional liquidity. Plus, and this is a subtle but really important point, there have been no recent reverse splits. You know, those desperate moves some companies make to artificially boost a falling share price? The absence of that suggests real structural integrity. But hey, a good briefing always covers all angles. So let's pivot to phase 3, threat analysis. We have to look at the criteria VTEX failed to meet and really understand the risks involved. Okay, the first red flag for me is the revenue growth. It's sitting at 12.5% year over year. Now, that's not terrible, but it falls way short of that 20 to 30% target we look for in a high-growth, momentum-style play. This is a crucial distinction. Next, let's talk about the public float. That's the number of shares actually available for us to trade. It's over 51 million, which is pretty large. It requires a ton of buying pressure to really move the price. Compounding this, short interest is low at just 4.81%, and the cost to borrow shares to bet against the company is practically zero. So let me bottom line this for you. There is absolutely no short squeeze potential here. None. And this chart just visualizes that negative sentiment perfectly. Take a look at the last week. The stock price fell over 4%, and at the same time, short interest actually increased by 4%. The market right now is betting against it. All right, let's bring it all together. Time for phase 4, the mission briefing. This is where we synthesize all that data, the good and the bad, and turn it into an actionable, tactical plan. So the final verdict is conditional. And this quote from the analysis sums it up perfectly. It's a candidate for value play, but only if, and that's a big if, key conditions are met. Timing and price action are absolutely everything here. So here is the tactical plan, step by step. Step 1 is to monitor. We're watching that critical $3.12 support level like a hawk. Step 2 is the trigger. We do not enter unless we see that support hold and the price begins a clear positive recovery. And only if those conditions are met do we even look at step 3, the target, where the analyst consensus at 639 offers some significant potential upside. Let me be crystal clear so we're all on the same page. Based on the data, this is not a growth play. It's not a momentum trade, and it is definitely not a squeeze setup. The entire thesis rests on this being a pure value play, banking on that strong ownership and solid balance sheet right at a historical price floor. So, what's the final takeaway? Do not act yet. Monitor that support level. The strategic edge here is patience. Keep VTEX on your watch list.
Swing Edge Pro, the intelligence feed for decisive traders.